Something changed quietly, and if you rely on monthly benefits, this change may already be shaping your future income without you realizing it. There was no emergency broadcast, no flashing headline, no letter marked urgent in bold red ink. But behind the scenes, the Canada Revenue Agency updated income thresholds that directly control how much money seniors receive every single month. These thresholds decide who keeps full benefits, who sees reductions, and who faces complete clawbacks. And the most unsettling part is this: many seniors will only discover the impact after the money is already gone. The CRA income threshold is not just a number on a tax form. It is the invisible line that determines whether old age security remains intact, whether the guaranteed income supplement stays protected, and whether other income-tested benefits continue or begin to shrink. Once your income crosses certain limits, even by a small amount, the system responds automatically. There is no warning call. There is no grace period. The calculation happens, and the result shows up in your bank account months later. This update matters because thresholds are not static. They move. Sometimes they increase, sometimes they change how income is counted. Sometimes new reporting rules tighten the net. When that happens, seniors who believed they were safely under the limit suddenly find themselves flagged as over it. Not because they made a mistake, but because the definition of income shifted just enough to change the outcome. Monthly benefits are built on annual income reporting. What you earn, receive, or withdraw in one year determines what you are paid in the next benefit cycle. This time gap creates a dangerous delay. By the time a senior realizes their income exceeded a threshold, the reduction has already been calculated, scheduled, and locked in. Appeals are difficult. Reversals are rare. Prevention is the only real defense. The most widely affected benefit is old age security. OAS is not income tested at the lower levels, but it is clawed back once income passes a specific threshold. That threshold is updated periodically, and once crossed, the clawback begins dollar by dollar. The higher the income, the more OAS is reduced. Eventually, it can be eliminated entirely. Many seniors assume this only affects high-income retirees. That assumption is dangerous. Modest pension increases, part-time work, RRSP withdrawals, or even capital gains can push income across the line. The guaranteed income supplement is even more sensitive. GIS is strictly income tested, and small changes can cause large drops. A few $1,000s in additional income can mean hundreds of dollars less per month. In some cases, it can mean losing GIS entirely. The CRA threshold update affects where that cutoff sits and how income is measured against it. Seniors living month to month feel this impact immediately when payments change. What makes this update unsettling is how ordinary income can trigger extraordinary consequences. Pension adjustments, inflation indexing, one-time payments, or required minimum withdrawals all count as income. Even income that feels temporary can permanently affect benefits for an entire year. The system does not care whether the money was needed, unexpected, or unavoidable. It only reads the total. Another critical factor is how income is reported. The CRA uses line items from your tax return. If a number appears on a taxable line, it is considered income for benefit calculations unless specifically excluded. Many seniors assume certain sources are ignored. Often, they are not. This misunderstanding leads to shock when benefits are reduced. Threshold updates also interact with timing. When income rises in one year, benefits are adjusted the following July. That delay creates confusion. Seniors look at their current income and wonder why payments changed. The answer is often buried in last year's numbers. By then, options are limited. Couples face additional complexity. Combined income calculations can affect GIS eligibility. A change in one spouse's income can reduce benefits for both. Widows and widowers face abrupt recalculations when marital status changes. Thresholds apply differently depending on household situation, and updates can amplify these shifts. The CRA does not individually warn seniors before thresholds take effect. The responsibility to understand and anticipate changes rests entirely on the recipient. This is not negligence. It is how the system is designed. Automation replaces discretion. Numbers replace context. The most surprising fact is how narrow the margin can be. Crossing a threshold by a few dollars can trigger clawbacks worth thousands over the year. This creates a cliff effect. Benefits do not taper gently at first. They respond firmly once the line is crossed. Tax planning becomes survival planning under this system. Decisions about when to withdraw funds, how to split income, and whether to defer certain payments can mean the difference between stability and loss. Without awareness of the updated thresholds, even careful planning can fail. Another overlooked issue is retroactive adjustments. If the CRA later determines income was higher than initially reported, benefits can be clawed back after the fact. This can result in repayment demands that arrive without warning. Seniors living on fixed incomes are especially vulnerable to these shocks. The update also affects supplemental programs tied to federal benefits. Provincial supports often use federal eligibility as a baseline. When federal benefits drop, provincial assistance may also change. One threshold adjustment can ripple outward, reducing total monthly support more than expected. Inflation plays a quiet role here. As pensions and incomes are indexed upward, thresholds may not always keep pace in a way that protects purchasing power. Seniors can feel poorer even as their nominal income rises, simply because benefits shrink at the same time. This is why today's alert matters. The CRA income threshold update is not abstract policy. It is a practical shift with real consequences. It determines whether monthly benefits remain steady or begin to erode. It decides who must adapt and who will be caught off guard. Understanding this update is about control. Seniors who know where the thresholds sit can plan around them. Those who do not risk learning the hard way. The system rewards awareness and punishes assumption. Every dollar of income has weight in this calculation. Every reporting decision matters. Every year resets the equation. The update reinforces a simple truth. Benefits are not guaranteed in isolation. They exist within rules that can change quietly but decisively. If you depend on monthly benefits, this is not the time to be passive. Knowing the thresholds is knowing the battlefield. Ignoring them is surrendering control to a system that does not pause to explain itself. Check your income. Understand how it is counted. Pay attention to threshold updates, because once the payment changes, the warning has already passed. Subscribe for clear updates that protect your benefits. Share this with someone who depends on monthly income support.